Thinking about buying a home, but not sure if it's the right time? You've heard about buyer's remorse and regret after buying a home and want to make sure you can avoid those pitfalls? Today, I am answering your top 10 questions that you have asked about buying a home in today's market. By the end of this video, you will feel more confident about your next step, whether you're ready to buy tomorrow, preparing for sometime in the future, or just wanting to research the process. My name is Jan Dykers. This is my 20th year of selling real estate in the Detroit and Southeast Michigan market. I love to help buyers. I love to help people build wealth through real estate. And most of all, I love coming on here and answering your questions, helping provide you value and understanding. So let's get started. Question 1, is now a good time to buy a house? So I know there's a lot of uncertainty out there. There's definitely a lot of uncertainty in the headlines, but there's headlines and then there's reality. Every buyer's timeline and decision should be based on their personal readiness. Usually, opportunity only looks like opportunity in the rearview mirror. We never truly know what's going to happen. So base your decision on buying a house with the following: job stability, finances, and lifestyle. If it's the right time to buy a house, if you have the money that you need to do so and you're feeling pretty good about your employment, then I would say it's probably a good time. In Michigan and in Metro Detroit, we are still in a very affordable market overall. We don't have the same real estate prices like you see on the East Coast and West Coast. So buying a house and affording a house is definitely a lot easier in this region. It is still, for the most part, a seller's market, and we'll talk about that a little later, what that means and what that looks like. But there are still opportunities for a buyer out there. And for those of you thinking that there might be some kind of a recession, we will be covering what that looks like and what recovery looks like in the future questions coming up. My takeaway for all of this is focus less on market timing and more on life timing. Is it a good time for you to buy a house? Then maybe it's time to talk. Question 2, will mortgage rates go down? If you tell me to marry the house and date the rate, I'm going to throw up. So rates are moving in the right direction, but they are not guaranteed to drop fast. The Fed agreed to lower its fund rate by 0.25%, but most of the reduction in the mortgage rates already happened prior to that decision. We're kind of in the 6.5% range for conventional and in the high 5s for FHA. Let's take a look at these mortgage rate projections. Just some very smart people deciding what they think mortgage rates are going to be like based on the data that we currently have. And so far, they're probably about right. We're at 6.5%, and we're probably going to stay that way. This data coming from Fannie Mae, the Mortgage Bankers Association, and Wells Fargo. What I do want to tell you is that waiting for mortgage rates to go down could result in home prices going up and your rate basically staying the same. Let's look at this graph of the average sale prices in Michigan over time. So this is the past 10 years, and what you see with these waves is seasonality. So the average prices are going to peak in about June of every year, and they're going to bottom out in January. But you can see an overall trajectory just going up every year. So the time when you waited for mortgage rates to come back down, which was when they started going up for the first time over 5% in August of 2022, you can see very clearly that even though rates went up, so did home prices. And so if you are waiting for rates to come down, you might be pricing yourself out. What I also want to tell you is if that you pay a little bit of extra money towards your mortgage every month, you are canceling out future interest that you will have to pay. So who cares what your rate is as long as you can afford your payment, of course. If you're putting an extra $50, $100, $200 towards your mortgage payment every month, you're actually reducing your interest rate by future canceled interest. My takeaway for all of this: Don't gamble. Plan for today. You can adjust later. Question 3. What should I know before buying a house? Now, we could go real deep on this one. And I think I hear a lot of buyers talking about remorse. Not buyers that I have represented, of course, because I prepare my buyers very well for home ownership. But you see, Reddit threads and chatter. I mean, that's where these questions all came from, is like buyer sentiment online. And so you have a lot of buyers that mentioned that they were unprepared for the home buying process and had a lot of surprises and potentially remorse after their purchase. So here are some things that I think are important to know. The first section is the financial stuff. Get pre-approved early before you actually go home shopping. Don't fall in love with a house and then only then are you going to get pre-approved. Let's also talk about property taxes because those are my jam. So if you are buying a home from somebody that has owned their home from a long period of time, their taxes are going to be way lower than you will be paying. The first year that you buy your house, you will actually just be paying the tax bill of the previous owner. So it will seem like your taxes are super low. The year after, what happens is they get reassessed. They uncap. They start getting calculated based on the current value of the home, not the value of the previous owner. And if a buyer does not know that this is going to happen, then they could be in for a big surprise. Your lender is only going to require you to budget your taxes when you buy based on the previous owner's taxes, which I don't love. I think that's not great. I think that they should require it to be based on what the next year's taxes are going to be, but here we are. This is something that you should know and that you should account for. Okay, and then the last financial thing that I think buyers should know that they usually don't prepare for: how much does it cost you to buy your home? Besides your down payment, you will have some closing costs. You'll have a closing fee, you will have insurance, you will have prepaid taxes, and you will have title insurance. So there's a whole bunch of things that go into buying a house. So not only you want to make sure you comfortably have enough for the down payment and closing costs, but you also want to make sure you have a little extra money for the purchase process. You're going to have a home inspection. You're going to pay for the appraisal. Those two things combined are probably $1,000, maybe a little bit more if you want to do some extra home inspection things like a radon test or a mold test or some other things. Okay, so what if your first deal falls through and now you have to pay for a second home inspection and a second appraisal? This can happen. Sometimes you get a house and the inspection is just not good. Like it's a lot and you just don't feel comfortable moving forward. So you want to be able to prepare to have that extra cash so you don't have to give up on the purchasing process or really, feel like things are tight while you're trying to find another house. My takeaway: prep now, less stress later. Question 4. Are home prices going to drop? There is a lot of chatter. I'm sure you see it in your social media and on your news feed every day. But what really matters is what is happening locally. So I want to show you a graph. This is change in home price growth over region. And the darker colors are doing stronger, better growth, and the lighter colors are having slower growth. So, we're not doing as well as the Middle Atlantic region, but we are definitely, the Midwest region is performing quite strong, average of 5.3% growth. Now that's going to depend on the specific state, the specific sub-market, the specific market. However, our region is still performing quite well, as you can see from this graph. If there is some kind of a market correction, there will always be a market recovery. I'd like to show you this graph now, which is the median sale price of homes. This is nationwide that's sold in the last 50 years. The red arrows are recessions. So as you can see, and the biggest one is that 2008 and 9, where we saw the biggest dip in home values. Look at our recovery. There's always a recovery, and it was a pretty big one. So even if there was a market correction after you purchased, there's always a recovery. The last time we had a really big drop I would say the only time in those 50 years we had a really big drop is the Great Recession. It was caused by the mortgage industry, and we had far too much inventory for all the buyers that wanted to buy. Too much inventory, huge drop in values. So I want to show you what that looks like. So this is the months of homes supply in my MLS since 2006. So a month supply refers to how many properties on the market and how long it will take them to sell. So if you took a snapshot of every house that's on the market today and no new houses were listed, how long would it take to sell the houses that were on the market today? That's a number that's recorded in months. So as you can see in late 2007, early 2008, that number of months of inventory almost hit 20. That's the biggest that we've ever had. We are closer right now to about 3. That's a seller's market. A balanced market is between 4 and 6. So as you can see, with 20 months of inventory, prices are going to come down because you have too much inventory. We actually don't have enough inventory right now for all the buyers that want to buy. Again, we're not even in a balanced market. We're in a seller's market still. And so because of that, I just don't see the factors that would go into the same kind of market crash that we saw in 2008, because we just don't have that amount of inventory to go from 3 months to 20 months. We just don't have enough houses for the population growth. We are seeing some areas, some municipalities, some neighborhoods that are stabilizing, meaning homes are not gaining value. We may even see some homes that are in neighborhoods that are losing value. Let's just say the Detroit condo market is probably the only one that I can think of right now. And then you still have a few areas that are increasing in value. So depends on what market you are currently in, what kind of house you want to buy, what part of the city, what price point, all of that, to really understand the likelihood of where your property values, where home values are going to be moving. Takeaway on this one: don't wait for a crash that may not come. In part 2, I'll go over 5 more burning questions buyers are asking. If you are asking these questions yourself, know that you do not have to figure this out alone. Reach out to me. I'm more than happy to help guide you and support you. And if you are watching this from a different state and you want to be introduced to an amazing real estate agent in your market, reach out to me. I know amazing agents all over the United States. I would love to hear from you. I would love to hear a comment, hear about what you're struggling with, hear about what questions you have. What questions did I not answer for you that are burning on your heart right now? My contact information is here. Please feel free to reach out to me, phone, text, email. Don't forget to like and subscribe if you are getting value out of this content. And remember, buying, selling, and investing for all things real estate. There's a Jan for that.